What's going on, friends? How's it going? Have you been thinking about other ways to make money? Side hustles, taking up overtime at work, whatever it is. I also am aligned with that. I think about the same way, same thing. Ways to make money out there to propel myself and my family for the future. And, you could be a slave to the money until you die, or you can find unique ways to make money, which really aren't that unique or difficult to do. Ever since November 19th of this past year, I started doing options. And so it never was a big availability or option to me because at Questrade Canada, mostly Canada, the rules in a tax-free savings account is you couldn't sell puts. All you could do was write covered calls, and I just didn't have any shares that I wanted to write covered calls on, or companies that I had 100 shares of that I wanted to write 100 or a call on with 100 shares. So I was kind of stuck, right? But a new rule came into place allowing me and you, anybody in Canada, with a Questrade account, even in a tax-free savings account or an RRSP, that you can write options, specifically selling puts. And so from that day forward, I started the small footprint in the options world here. And so far, so good. I want to go over the results. I want to go over my eye, what I'm looking for when I trade options. And like affordability, these are all things I've been thinking about. I need something that's affordable to get into, to get that footprint in, but also enough to like pique my interests. You know what I mean? So I've traded options now, like I said, since November 19th. I'm going to share my screen. I'm going to share some of the thought process up here. I'm not an expert in this, just so you know, but I am. I'm learning how to do this. Chime in the comments below if you are doing this as well. I'm going to just share the wins, the negatives so far. So my original starting cash was 1,600 US dollars. That's how much I had. How did I get that 1,600? I actually sold a whole bunch of shares of a fund called Coney, and they're developed the cash of 1,600. Now, what we're talking about is something called a cash secured put, or a CSP, and we're selling the put. All right. So the very first one was on November the 19th. I sold a put on a ticker called TSLL at $15 strike price. So that means I had to pony up $1,500. Okay. I had 1,600 to start, so I was good. Not too bad. And then I set an expiration date of November 28th. Now, what that $15 means is that if the price got to $15 or below it by November, or on November 28th, sorry, I would have bought those shares at $15. Even if it went to $10, I would have bought it at 15. Oof, that would have been rough, right? Lucky me, the price of TSLL went up during that time. So originally I collected $44 premium. I got a little bit like trigger happy, and I ended up closing that early on the 25th. So 3 days earlier, it cost me $6 to do that. I could have just let it go and expire what we call worthless, and it wouldn't have cost me anything. But I wanted to move on to the next option, right? So here we go. That was a profit of $38. Not too bad for just, right around, I don't know, what's that, like 7 days, 8 days, 9 days, something like that. So I did it again. I did it again on the next one. And so the next strike price, because the price of TSLL was going up, so the next strike price was $1,650. Now that was over top of my original cash of $1,600. I had a little bit extra cash in there from this 38, and then probably a distribution from another company in there. So that generated me $47 in income. I let it go until the day before, and then I closed it for $3, so a total profit of $44. I'm going to get into some of the strategy behind this. I'm going to get into some of the finer numbers so you can see it for yourself in just a couple minutes. Thanks for being here, by the way. Hit the like, the subscribe. My name is Mike. Channel's name is Health and Wealth. I hope you guys are doing great. Happy Friday to you. Let's go into my most recent purchases here. So I got into CLSK. Just so we know, so far these two names are extremely risky. What comes with risk is volatility, implied volatility, which generates income, more income than if you went with something a little more plain Jane. So CLSK, Bitcoin mining company, and it was I set a strike price of $12.50, and that was for December 19th. That generated me $30. And then the price of CLSK went. You know what my first mistake was, everybody? I did this right in the earnings season of CLSK. They didn't have great earnings. The price went way down. Bitcoin was going down. So I had to roll this to a new strike price. So on around December 19th, actually, I think this one was like very close to 2 o'clock in the afternoon. And that's when Questrade says you got to make it happen, right? Or they're just going to action it. So I rolled it to January 9th. And because of doing that, I set the same strike price, $12.50. It generated me $56. Pretty good. Now, what I had to do there was buy to close the original $12.50 here, strike price for December 19th, and then I had to sell a put. Super simple to do on Questrade, but yeah, that generated $56. The price kept staying down. In fact, you know what? Let me show it to you right here. And let's go 1 month. You can see it down here below the $12.50, right? So I'm getting nervous. I don't want to buy CLSK. It's not a company that I want in my portfolio. So I was getting a little nervous. So I ended up rolling it again for January 30th. So another 14 physical days from today. That generated an additional $61 for me. So this entire time, you can look at it different ways. I'm generating income from selling puts on CLSK. I'm lowering my cost basis if I end up having to buy it. You can look at it all of these different ways here. So far, so good. Let's take a look at CLSK today. Today, we're trading at $13.41. Remember, my strike price is $12.50. And again, that's about 14 physical days, not trading days away from now. So this thing can go up and down. You can see in the last 5 days here, it went up $1.69. It can go up and down pretty quickly. It follows Bitcoin, not fully, but it does follow Bitcoin. If Bitcoin does well, this does well. If Bitcoin doesn't do well, it doesn't do well. So it's a super risky stock. I remember investing in this stock. One of my very first things I ever bought was CLSK, and I probably didn't make money by owning it. So there we go. Those are my CLSK positions. Pretty good. I'm not sure what's going to happen December or January 30th. If the price stays where it is right now, I'll let it expire worthless, which means that I collected the $61 in premium. I don't have to do anything else. It just goes away. And then I can start a new position in it if I wanted to. And I'm going to show you that position coming up here shortly, what I could do, just to give you a snapshot of what it looks like. Then yesterday, I had an additional $600 in my account just sitting around. Remember, that one's $12.50. I had $1,600 starting off, and every single time I get paid a distribution, half of it goes to my margin, the other half stays here as cash. So I can start getting into I'm knocking on wood. I can start getting into better names, more reliable names out there. The reason I'm laughing is because Open, you can see it on my screen, it's not a reliable name. It is a terrible name, but it's volatile. Okay, so what I did is I started a new position yesterday selling a put on a $6 strike price for January 23rd. So, a week and a half-ish, and I got $14 worth of premium. So I'm going to share the screenshots with you guys so you can see them. This video is intended just to educate a little bit and open your eyes up for new ways to invest. But I'm going to just share with you kind of just my personal, what matters to me, or my personal tolerance level. And it might be different than yours, right? So Here's what I've made so far since November 19th. So we're talking 2 months, 2 months here, coming up in 3 days. $243 profit from the 1600 that I started with, or a 15% return. Remember, I do not own any of these shares for these companies right now. All I've done is sold puts on them. The plan is if I do have to buy them, then I'm going to write covered calls on them, generating premium at that point. So that's 15% in 2 months, or 7.5% monthly if we broke it down. And if you annualize that, that's a 90% return if everything stayed the same. You and me both know that's not possible, right? So that's a lot. I don't really want to make 90%. I mean, that'd be nice, but it's a little risky, right? I would like to make less than that. And so that kind of allows me to know that I can maybe pick the same titles here, but maybe less of a delta. Now, a delta is a percentage of the likelihood of this action happening. I'm going to share some screenshots with you. Let me do it right now. First one I'm going to share is CLSK. I'll bring it up full screen for us here. I just took a screenshot about 2 minutes ago, and this is for January 30th as of today. Now, these aren't the premiums I generated because I did it, a week ago. But let's say CLSK. Let's go look at it again. What's the share price of it? 1337. Right. So if you sold a put at a 1150 strike price for January 30th, you would generate anywhere between 19 and 24 cents times 100. So let's call it $24. And the likelihood of that 1150 happening is a 15% chance. This is not set in stone. And that number that I'm looking at right there, that I'm underlining here, this one right here, it changes by the minute. Okay, so when you're in there, you're selling a put. This changes all the time. My area where I've been selling these puts at is at 20%. So you can see the one down below it here. And you can see it would be a $12 strike price. You would generate 29 to 32 cents. You can usually pop 31 in there and get it. That would be $31 minus all of your commissions. And it's a 20% chance that would happen. Okay. Again, not set in stone. That's just what the delta is. If you want to know more about that, Google delta with trading options. Okay. My current strike price is 12.50. Remember, this is from today's date, not a week or two ago when I rolled it. It's 12.50. Now, this would generate, it's going up because you're getting more risky here. So this would generate $46. Tops at the exact moment, $46, but probably around 44, 45. You could put a bid in here, but that's a 27% risk. The next one's 36% risk. And then you can see if we set a strike price at 13.50, that's a 44% risk. But what comes with risk is higher premium, so $89. Now, I want to go look at it one more time. That was at 13.50. I mean, that's over top of the current share price of CleanSpark. I probably wouldn't do that one unless you're anticipating Bitcoin to take off. But that for me is far too risky. Unless you really wanted to buy it and you knew that 13.50 was a good price to buy it at, you just had that feeling, or you've looked at the charts, then sure, go for it. But for me, that would be a no-go for sure. So that's CLSK. I've got a bunch of other examples over here. When I was searching for OpenAI, I was looking for ideas. And so I went to Big Bear AI. And I looked up, this is just today. I just took the screenshot right now. Don't mind my handwriting in here. But yeah, Big Bear. Let's go take a look at the share price of Big Bear AI, $6.32. So if you set a strike price for next Friday here at $5, you're looking at a 3% chance of that hitting, and you would make a whopping 2 cents. It'd be nothing, right? $2. That for me was not worth it. I didn't get into Big Bear because of this. All right. So you can see down here, there's no 20%. There's 28% it's going to happen, or 11. So my goal is 20% or a little bit less. But like 11's far too less, and 28's too risky for me. So these are some of the reasons why I didn't get into Big Bear. Now, one of the things you could do is change the week, and you go to the 30th as an example. Let's go bring that one up here, and you're going to notice that these numbers are now going to be slightly um, more lucrative for you. So if we set it at $5, remember before it was $2 you got. Well, now it's $5 because we're a 1 week later. But look at the percentage of it happening, 7% chance, right? So likely not going to get to $5. But again, these are super risky, volatile names. So you never know. There's 550, 17%. That's more my speed right there. And that would generate $12. So I would have to pony up $550 in cash and leave it out there in the world until January 30th, and I would get $12 minus my commission of 99 cents. So I'd get $11 for this, and it would be a 17% risk of that coming true. So the price gets to 550 or below. Okay, so I didn't get into Big Bear AI only because it wasn't lucrative enough for me. That's the reason. But I did get into Open AI or Open here, which is a real estate thing. I am in real estate, so I figured why not join my competition here a little bit. And I did sell a put on Open for next Friday. We already took a look at it, but I want to do it again just so I make sure I've got it right here. So Open, I set a strike price of $6 for January 23rd. It made me $14 at the time of doing this. I did it yesterday. No, 2 days ago. I did it 2 days ago. If I did it yesterday, it would have generated a lot more income, that's for sure, because yesterday was a down day for Open. So here is January 23rd. I said $6, and it made me 14, right? $6 was my strike price, made me $14. And at the time, my risk, my delta was 20% when I did it. So I'm sticking to my guns on this 20% business here. I don't mind a little bit less because, you guys saw the chart. So far, I'm bringing in 7.5% a month, and that is at a 20% risk level. So that's a lot, right? 90% is a lot over a year. So if you don't want to be super risky, you can go down in the risk level. If you want to be more risky, you want to own this stock, then you can be more risky. It's going to generate you more income, more money, right? And we all talked about, me at the beginning of the video, I talked about side incomes, making money. So for me, this is not something that I want to necessarily own. So I'm keeping the delta, which is this right-hand side right above my head here, lower when I make the purchase of Open here. So that's what I've done so far with my options. I'm very happy with 7.5% every month so far. Again, that it's going to work out to about 90% annualized. I might tone it down a little bit, and I still have $1,250 in the CLSK purchase, and I have $600 in the Open purchase. So I have $1,850 out there in the world. If the price of Open goes below $6 on January 23rd, then I've got a couple things I could do. One is I could roll it for a future date, maybe 2 weeks, 3 weeks, a month away, and generate some income that way. If it's way below $6, then I'm just gonna bite the bullet and take it, and then write covered calls on that position. Or I could just let it expire worthless if it's above $6, and then take that $600 and go do something else with it. Maybe Big Bear AI, maybe add it to my CLSK position. I don't know. The world's my oyster. For me, I am constantly exploring different names that have high premiums to them because I am looking to generate income. Eventually, I would like this income to supersede or pass through the distribution or dividend income I'm getting so far. 7%, 7.5% every month so far, without having to really risk too much has been good. But eventually I want to take this and build it into a bigger piece of pie so I can buy some more safer names that aren't going to pay as much, but I just feel better about owning the stocks if anything happened to them. My name is Mike. Channel's name is Health and Wealth. Have a great night.